You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Mike, welcome to the show.
Oh, thanks for having me.
Taking a look at your very popular website, one of the items that really caught my eye was gambling stocks not worth the gamble for now. Why not?
Well, I'd like to look at the stock market and break it up into sectors, and I use TC2000 to do that. It breaks it up into about 238 sectors. A lot of people want to use Investors Business Daily to look, it'll break the sectors up too and show you how they're performing. And the thing about gambling stocks is they have a real toxic combination because the sector as a whole has actually been one of the worst performing sectors in the entire American stock market is in regards to relative strength. They're not going up as much as the rest of the market, and in fact, most of them are well off their highs and haven't participated in this recent rally. But not only that, but these stocks are highly overvalued with sky-high PEs and price-to-sale ratios from a historic standpoint, and they all got really high debt levels, and a lot of them are actually in financial trouble. Caesars, which is one of the biggest casino companies, is actually having one of its main units is on the verge of going through bankruptcy proceedings. If you go around, if you read about the casino industry, basically what is happening is you see casinos growing up all over the country, but their earnings as a whole aren't growing, and the number of gamblers going into casinos isn't really increasing. What they're basically doing is building more casinos, but not expanding their market, and that's actually increasing their overall costs and causing a lot of pockets in the casino industry to really essentially go down the toilet. Number one example of that is Atlantic City, where I think 3 of the casinos have shut down in the past 16 months. One of them just opened up about 2 years ago and cost billions to make it, and it's already closed its doors. And Trump, the Taj Mahal is on the verge of closing too. So it's a troubled industry, and the stocks I think are at risk of having a sharp pullback. Even if the stock market doesn't pull back, and if the stock market goes into a bear market, these stocks can fall 50, 60, 70%.
It seems to me every time the government here in British Columbia falls into hard financial times, they open another casino. Is it different?
Well, yeah, I mean, it seems like to be a good way to raise taxes, but that's what's happened in the United States. I mean, in the past 10 years, they've built casinos in Pennsylvania and Maryland. I can't remember the exact figures off the top of my head, but it's like at least 50% of the states now have casinos. They're building new ones like crazy. Actually, in Baltimore, they just opened one up a few months ago. They had opened one up, I think it was 2 years ago, right in the beltway of Baltimore, and they're building one right on the edge of Washington, D.C. So there's 3, just being, either new ones within the past 3 or 4 years in a 100-mile radius.
Well, surveys show that about between 4 and 5% of the general population is addicted to gambling, and they account for over a third of gambling revenue gathered in by government lotto agencies. Is this a sad state of affairs where you're depending on gambling addicts to fund your government?
Well, I think the question kind of answers itself. It is what it is, but I think you're right. I think it starts with state lotteries, and once the state opens that up, then there you go. It's kind of in certain ways, the gambling, the lotteries are just bad. There's literally 0 chance of winning anything, 1 in a million chance. It's the worst odds possible.
Alan Greenspan, the former chair of the Fed, says getting rid of quantitative easing is going to cause turmoil. Should the government keep shoveling out billions of dollars every month for the stock market, or is that a stupid strategy?
Well, what's interesting about it is when Greenspan was the chairman of the Federal Reserve, in 1999, he was scared of the Y2K bug, that it was going to cause all computers to shut down and mess up the banking system. And what's funny is in December of 1999, he pumped in about $35 billion into the banking system just as an insurance case that bug hit. Of course, it didn't hit, but that $35 billion helped propel the NASDAQ into a hyperbolic rally from December to March, one of the greatest 3-month moves in the stock market ever. And it was that $35 billion pump that helped it happen. And now, the Fed has been pumping out 50 billion just to keep the market afloat. And now, of course, their pump is gone for the time being, and they've pretty much hinted last month when the market was falling for a little bit that they would step back in if need be. What I find fascinating, though, is that Greenspan's $35 billion pump propelled a manic rally, and now they got a pump just to keep things alive. The effects of money printing is diminished, not only with the stock market, but with the entire economy as too. Debt creation is taking greater and greater amounts of debt creation, to create something that they call economic growth. When in the past, it took less money to make the economy really grow well. It's just diminishing return on debt and issuance.
Is there an over-reliance now on these quantitative easings? I mean, first you had the U.S. do it. China announced a $81 billion economic stimulus package. Then Japan. Do they have meetings to decide who's going to do it next?
I don't know if they're coordinating that closely. It's hard. I don't know that no one's ever, revealed that. If they are, they're doing it in secret. I think, that these are policies, though, that are unsustainable and will eventually, lead to some serious problems. And it's not too late to get out of it. I don't know how they could do it, but there's got to be some people, if I was head of the Fed, get some people really smart to figure out how we got in this situation and get out of it.
Right.
And they haven't done that. They're just doing more of the same, and we're just supposed to hope that somehow it works out. And I don't know that's what's going to happen.
Well, a disaster expert told me once, a disaster response expert said, hope is not a plan. And yet they all hope it'll do something.
That's right. Now, as investors, though, we don't have to do that. The sad thing is we have choices. We just, for the most part, most people don't realize that or do anything to take control of their situation. So in the United States, what's essentially happens is most people think, I'll just put a portion of my money in stock, a portion in the bond market, and I'm fine. But if the quantitative easing blows up, you won't be fine because bonds will fall and the stock market will fall. But you have choices not to do that. You can invest in gold. You can invest in other currencies outside the United States or other stock markets. You can invest in REITs, land, real estate, a whole mix of asset classes that can balance out your risk. And that's really what I think the typical person would be better off doing than just hoping this will go on forever. Because if you got gold, if you got real estate, and a whole mix of things, you can weather a storm if a storm hits, and that's what people ought to be doing, in my opinion.
We'll have more with Mike Swanson right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Mike Swanson from WallStreetWindow.com. Mike, I read in one article, one of the analysts says that the Wall Street market is overinvested by 100%. Is that true?
It's overvalued. There's no question about that. If you look at just about any valuation metric, I mentioned the cyclically adjusted P a lot because it's really simple. It takes the P average adjusted for inflation over the past 10 years. It's invented by Robert Shiller. It's at 26, and, it's basically the most expensive stock market in the world right now. Japan's also highly valued, but valuations around 15 is the mean. So we're like 50% overvalued. And if you don't look at that, you can look at price to sales ratio, the PEG ratio for individual stocks. Like you look at the Dow 30, it's like twice what it should be historically. So, I don't know if the market's 50% overvalued or double overvalued or whatever the case is, but it definitely is overvalued, and that's what bull markets do. They reach often levels of wild valuation, just like bear markets reach levels of super low valuation. And some people say, well, great, that means valuations don't matter. You can't say the market's overvalued, so I should get out. Well, yeah, but it's as sure as a darn big warning sign. It certainly suggests that you shouldn't put new money to work. You want to invest in places cheap. That place is real expensive. So I really think people need to reduce their risk exposure to the American stock market and certainly to the bond market, which is actually the biggest bubble maybe there's ever been, because the valuations make absolutely zero sense because you can buy bonds and you make absolutely nothing. And yes, people are doing that thinking they're diversified. It's probably more risky than the stock market.
Mike, where should the smart money go?
Well, I think everyone should have a portion of their money in gold, silver, commodities that want to be more speculative, mining stocks, than just diversify in cheaper stock markets at this point outside the United States. And the European markets are still cheap, some of the ones in Central America and Russia. But even then, you got to be prepared for some sort of bear market or a hit, just in case that were to happen, or the U.S. stock market or Japan were to really drop, which I think is very possible at some point. So anything you do, you got to be willing to take some hits, because that's the environment we're in. If the markets were where they were in 2009, after a bear market had already happened and things were relatively cheap, that actually diminishes risk. And but that's not, when people want to invest.
Are these sanctions against Russia backfiring?
Well, they don't seem to really be doing anything and actually hurting the economy in Europe, it seems to me.
I mean, I've read an article saying the Russians now have boycotted Canadian and U.S. pork, so that's worth a few $1 billion over a year. They're not using dairy products from the Netherlands, and Russia was their biggest export market. It seems to me the West is the one paying the price for these.
Yeah, I mean, what good is a trade war going to do? It's not going to stop Russia from doing what it's doing in Ukraine. The Ukraine is sort of like the way the United States considers Panama or something, or they think it's part of their country. And we invaded Panama when some trouble came down there, 20 years ago. It's pretty much unrealistic to expect Russia to do absolutely nothing with the region of it, bordering it, that's historically half of it's been part of Russia. I mean, they're going to do something, and they are doing something. So we can't stop them. What are we going to do? Nuke them? What are you going to do? What we are doing is having a trade war, essentially, and that's like ripping your nose off. That's what we did at the edge of the Great Depression, too. It didn't work out too well.
I mean, somebody mentioned the 1998 crash was caused because Russia ran out of oil money and their stock market collapsed. They couldn't pay their debts. Any danger of that happening again? If Russia goes down, they take the world with them.
No, I don't think Russia's in that. No, I don't think. Oh, I don't think so. I don't think the sanctions are really having that big of an effect on Russia, and they're going to China now and making deals with them, and their government isn't in debt or bankrupt like it was in 1989. So I think they're actually in okay shape financially.
So what we've done is chase Russia into the arms of China. I'm sure the Chinese are very happy about that.
Oh yeah, I mean, if you think about the past 20 years in world power and foreign policy, China just sits there and doesn't really do anything except get stronger and stronger and stronger, and they make deals with other countries and increase their influence, and they're becoming the next superpower, and I don't know what we're doing. We're on war adventures that don't seem to work out too well.
One of the analysts I talked to said China is not interested in war at all. It's just business. They just want good business.
Yeah, I mean, they do things that work out to their benefit, I suppose. and not just drain away their wealth.
And of course, China too runs on long-term plans. They don't just look at the last quarterly report. They have a 5-year plan, a 10, a 30, a 50, a 100. Is it time the West woke up to that?
Well, I think so. I mean, I don't think you can look that far out into the future, but running a company or the government or whatever, you certainly can look out more than 3 months, which I think, most American corporations that trade in the stock market, that's all they do is, try to worry about their quarterly results. I mean, that's one of the main reasons the banking system went bankrupt 6 years ago, because all they did was care about padding their quarterly results, and they were willing to blow themselves up to do that. And the people running these companies, they didn't care about what was going to happen, when they quit. They just wanted their earning packages and their bonuses. And the government, unfortunately, it's running its finances in the same manner, running $500 billion now deficit, which it's an improvement from $1 trillion a couple years ago, but it's still unsustainable for the next 20 years at least. It could be even worse than that.
And of course, our politicians don't look any further ahead than the election cycle. So every 3 or 4 years, when another election's coming along, they bribe you with your own tax money, and then funny how everything else gets cut back right afterwards, right after an election.
Yeah, that's the thing. This country, it's not that these are bad people. They're trapped too. I mean, they're dependent upon their donors to get campaign money so they can run, and without that, they have no chance. And these people want spending in return. So it's really tough, and you get a situation where no one is really serious about budget. I mean, the Republican Party is the conservative party, and yet, in the last election, the presidential election, Romney talked about increasing spending on programs he wanted. This is a country crying out for someone to do the right thing and be serious about it. So, hopefully that'll happen one day.
Mike, thank you very much for chatting with us.
Yeah, thank you.
My guest has been Mike Swanson from wallstreetwindow.com. Contact Mike by email by punching in wallstreetwindow@gmail.com. I'm Jim Goddard. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. We're on Twitter at Talk Digital Net.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.